Sarah Howell. I work for Infinant, and Infinant is a orchestration layer for banks to own their own embedded finance products, own, produce, and deliver their own embedded finance products. And we can talk a little bit more about that, but have a history in core banking, card processing, infrastructure providing solutions, as well as I've worked at banks and card networks and credit unions. So I've been around for a while. So great to be here today.
It's such a funny point, right? It sounds like this crazy diverse background, but it's kind of what you need today, right?
It is.
I mean, all the people that we talk to, obviously yourself included, and we've got a lot of mutual friends, the real pros around here are kind of a hodgepodge of having done it all. You know, it all comes into play, doesn't it?
Yeah, totally. Which really is just a nice way of saying that we're kind of old. We've been around the block a while.
There you go. I just got off the phone with a guy, a big bank, a few minutes ago, and we were kind of talking about, the idea of this person, that person, what they know or their capabilities. And I was like, people that know banking, I think I've known 4 in my whole life.
It's a handful.
But what happens, and I tell the story about back in the day doing core conversions, and I'm telling my wife, this is such a waste of time. I'll never need to know this again in my life. And, but that's what it takes to really understand our industry today, is the evolution of it, and then all the parts and pieces, because now they all have to work together in a unique way.
Well, as we've ended up with bigger banks, I think you've got more horizontal problems with vertical people, if that makes sense, right?
A really, really wise way to say it. You're right. And in banking, I think that we are taught to go very deep, but not very broad. And so you want to have people that can think broadly about the whole ecosystem, but those are few and far between, right?
You bet. So thinking broadly, let me hit you with this. This is something we were talking about earlier today. All right. So I've heard a lot of people talking about, in the sort of BaaS and embedded sort of space, this idea of direct and indirect. Not my favorite terminology. I think it's a little messier than that, right?
Yes.
But I'll give you a good one that's fun. If you think about, we've got a BaaS bank, right? Sponsoring typically fintech programs, but brand or business programs. Cool.
Right. Right.
And then you've got a bank that does its own direct digital bank, right? Like I'm a big fan of Mike Fernandez and Bankers Lender.
Yep.
For both of those banks, BaaS banks, just one of them is sponsoring themselves, right? I know that's a stretch. I know it's a stretch. But I mean, if you think through the necessary infrastructure, maybe not for today, but for tomorrow.
Yeah,
it's a stepping stone, is it not? If some of these banks that are launching, essentially what is kind of their own fintech. I don't know.
Oh, totally. And I actually just had a call with one yesterday that's kind of like, okay, I've kind of outgrown this bank's core, because a lot of times you sit on the same core and you can be handcuffed to some of the same issues that bank is handcuffed to. So yeah, I definitely think there are similarities. I think that there are some compliance issues with the BaaS model and the traditional bank sponsorship model that you encounter that you would not encounter in a bank-owned digital brand.
Right.
The key for me, guys, I don't believe in the words direct and indirect. There's banking and there's not banking, and then there's you're a BaaS bank or you're not a BaaS bank. Period. I mean, we can go to the weeds on that, and I'll arm wrestle you to the mat. I guarantee I'll win on that one.
Hey, I don't know, man. I've been known to take you once or twice. Not on this one.
But here's the cool part of it for me, is that because of the way the technologies integrate, or whether you choose to or whether you choose not to. So if I learn from a fintech something really cool, or I see something in the marketplace out there that actually we're kind of a specialist at that at our own bank, right? So maybe we could do that too. Launching a direct bank in that area, that's exactly what a fintech would do when they see a hole in your marketplace, right? And so you're fulfilling a hole in the marketplace through a direct bank offership. And that is really sexy to me, because that's where I think learning from fintechs and how do I compete with them? Well, the direct bank model is the obvious way to do it. Now, the catch is, do you have to use your existing core and technology base? Well, of course not. So that right there opens up just a plethora of opportunities for bankers. I know what I just said probably sounded a little bit like a foreign language, but
I got you.
But over time, I think this will be more common language with bankers and fintechs and how we want to operationalize good ideas. And in the end, it's all about creating cool products that serve the consumers. And if you do that, I mean, that's what fintech is.
Yep.
I think it is, but I think who has ultimate ownership of that product? And I think that's where some of the confusion that's happened in our industry, or even in our industry supply chain, has evolved. So who owns the product at the end of the day? What would you guys say?
Yeah. And who owns the responsibility on the regulatory side? Everybody's like,
that's obviously the bank.
The bankers ultimately own the regulatory responsibility. It's like, duh. Okay.
Same thing, man. I didn't know if that was a trick question.
Yeah. So we get past that part and then talk about how we should do it, right?
Right.
Facilitating that in the smartest way that we can that protects the consumer.
Good call.
That's what's the answer? Hell if I know. But I can tell you that's where we need to be.
Well, I think to Sarah's point, I mean, look, you've got a lot of interesting pieces off of that based on the infrastructure, right? All the third parties that are plugged in. I mean, I think about contractual liabilities that get in this agent on behalf of agent, right? Oh,
right.
I mean, that gets a little messy.
Yeah. I think I would just propose that if you look at other industries, usually you have a producer of a product. And now that producer of that product might outsource the manufacturing of that product, but that IP belongs to that producer. So take the movie industry, for instance. If I'm making a film, that production company owns that product. They might outsource some manufacturing, but they own that product. So when they deliver that product to a distribution channel, maybe that's through, a movie theater. Nowadays, it's through Netflix, whatever. They still own that product end to end. They're just using a distribution channel to get that product to market. Is that fair? Would you guys say that? Okay. In the banking space, I think we've gotten the supply chain a little bit confusing. Traditionally, right, banks have always manufactured and distributed their own products.
Yep.
Whether they're manufacturing their product, always using an infrastructure provider like a core provider, card provider, KYC, whomever, they built that product using different pieces and parts of different tech providers. Then they distributed that product through first brick and mortar branch locations, and then second through digital banking applications that they own. So they own both the manufacturing and the distribution of that whole product, right? And the delivery of that product. But when the recession occurred and you had digital disruption happening, right? These fintechs and brands started being like, well, I can stand up a fintech app, or I can do something, I can engage, right? And so instead of going straight to the banks, who'd always been the producers and the distributors of financial products, they went to the infrastructure providers. And those infrastructure providers said, I'll help you produce a product. So now the supply chain's gotten really confusing. I think that's how we've ended up here. The challenge on that.
I mean, if you talk about the card space and program managers, right? There we are. Yeah, that's a great way to look at it. And finding some of the infrastructure providers that are then going back up the chain to the charters, right? To get the regulatory piece. All right, now we have a problem. Yes.
We've disrupted the supply chain, right? If we go back to the entertainment industry, right? If you look at the digital disruption of entertainment industry, first you had the filmmakers, they created a new form factor with digital disruption, new processes. So now you got a VHS tape or a DVD. You created new delivery channels through Blockbuster or Netflix. Then you had cloud computing, which was a huge change. And Netflix was able to pivot. Blockbuster wasn't. But Netflix always distributed, initially, they always distributed content that was owned by the film producers, right? Or the production companies. They didn't create their own original content until later on. And I think that we in banking have gotten it a little bit backwards, that we've started allowing folks in the supply chain to create original content.
You've actually, illustrated something I've never heard it illustrated that way. That's pretty cool. It gives you a lot to think about.
Yeah. Next time you're looking at Hulu or Amazon Prime or Netflix and you see original content or original on there, you ask yourself, dang, Is that what we helped create in the banking industry before it really needed to be created? And a highly regulated industry, no less.
Right there. Okay, now you hit the rub. That's where the analogy stopped. All of a sudden, it's like, hang on a minute. We can't produce original content in this industry because those players that do must be regulated. In our industry, they're not.
Right.
Let's go back to the primary regulator, which is the institution. And since the FI is the regulated party here,
exactly,
the distribution of the conversation significantly. So if you said Amazon Prime can't produce an original content, it'd be illegal. That changes the whole conversation.
Exactly. Essentially what we tried to do, I think, because you had technologists going, right, creating these experiences and going to the infrastructure providers. And I think what we did, and I'm guilty of it too, being part of FinTech, tried to abstract the core and abstract the charter. And I think that we can abstract the core, take away some of the complexities associated with dealing with legacy core technology and start creating products above the core. 100% believe that. But you cannot abstract the charter.
Right.
And I think that's what these models are doing.
This is what I get so excited about is the cores. I don't even like the word legacy core. Let's just say the cores. They've understood that now enough to be able to, 3 or 4 of them have actually started producing their own types of products.
Yes.
That can sit next to any other core or one of their own cores. This idea is how they get back into the game in a leadership role, which is pretty cool because it's kind of like their bundling of products and services has locked in a certain amount of institutions. And then they've actually began to realize that unbundling their primary service as a ledger benefit to them.
Yep. Wow.
This is so cool, right?
Oh, yeah.
And then unlocks the door for all types of opportunities. So when we really get down to
but the reason why for that recognition, I think is super important. And it's to Sarah's point, right? When you have net new sort of fresh competition on the cores that are actually blowing up charters, guys, let's fricking rip the Band-Aid off here, right? Like the core model sort of fixed the supply chain in such a direction that these new connectors come in and try and break that supply chain, right? That direction. And they blew up charters right and left. We're seeing this happen. And so the cores are looking at this going, hey, everybody wants to redirect the flow of this water, so to speak. Let's do it ourselves in a safe and compliant way, right? Now we'll see how that all plays out, but it's pretty interesting to see that that's really the causality if you think about it.
Completely. And I think that to the core's credit, I mean, we need microservices available within the core. We need to be able to unbundle some of that. And the US banking system has been, I guess to a certain degree, a little bit spoiled because these infrastructure providers would create all of these ancillary products and sell one bundled product to the banks. And so you're talking about not just a core, but the settlement, you're talking about the debit gateway, the last mile delivery to the banking rails through the payment hub, all of that was bundled and the managed services. And so it was kind of like the banks were outsourcing a lot to these infrastructure providers.
The whole thing, right? Okay, there's 80 products on a core contract.
We just ran right along and fell right off in a giant hole. Really cool stuff. Yeah. What happens is the bank has the relationship with the core, with the bank, the core provider in the bank, and then we have the debit processing or the other things, all directed towards the distribution channel of the bank's customers, right? And then here comes the Marquettas, Galeas, all these guys saying, okay, we got fintechs as our direct customers. And I don't know whether they're direct consumer or how they do what they do. That's a different supply chain for us. Right. And bam, they run into each other in banking and fintech. And now all of a sudden it's like, are those guys wrong because they don't have a major core distribution with the bank, or are the primary old, or what we call legacy cores, do they need to change their model? And both are trying to do the best they can.
Oh, with 2 or 3 beers, you could argue this either way.
Right, man.
Let's be, you know what I mean?
Are we disrupting the ledgering system? Or are we going to expand the ledgering options? And here's where it gets so important to me. Okay, you go into, we can take a teller. She can run around over and sit down over here, and she can take this lady that comes in to open her business or open her consumer account, and they're reading the screen going, I need a driver's license or a passport. They don't necessarily know what regulations, because they're built into the software, right? And so the compliance piece of onboarding a new customer or creating a new account, It's built in software. All right. So let's take this.
Because fintechs don't know bank regulation.
Hear me out here. This is so cool.
Fair.
So back to this conversation of the other players over here. When anyone from that world comes into a bank environment and says, yeah, we can open new accounts, we can do a card, we have APIs for all this stuff, right?
Right.
These things. All right. So it gets kind of groovy when you sit down and say to the banker, yeah, we're compliant. And they're like, sounds just like Fiserv or FIS or anybody else we've ever used. It's perfect. They're compliant too. And when we open an account, we'll ask for the driver's license. We'll do these things. Perfect. Except they're not. Except they're not.
Right.
Okay. And the idea that all of a sudden what I thought I was working with is not what I actually thought I am working with, because they're not fully regulatory.
Well, they might have two or three or four maybe banks versus hundreds or thousands, right? The checks and balances aren't there.
So if you kind of catch what I was saying there,
yeah.
we have a system in place over here that's somewhat compliant, but don't worry, all the regulatory burden goes right back to the bank. Duh. Okay. And then the other system that we have, legacy system, it is all built in and it really is all compliant.
Yeah.
It presents itself that way when it's not. And this one doesn't even talk about it, and it is.
Well, but I think the last one that you said, the one that doesn't talk about it and it is, like the regular, core providers, I mean, they've had to be compliant because their customers are banks. With some of these other guys you're talking about, their customers are not banks.
That's where I was going, is the connector world, they might have 3 or 4 banks.
We've disrupted the supply chain, guys.
Their customers are banks. And that's now their customers are banks. And they're not.
Right.
That's where the rub hits for me. Not for me, it's where it hits for the regulator and everybody else. This is not like, hey, who's a good guy and who's a bad guy, and you shouldn't say this or you should say that. Guys, it's just a problem to fix. That's all.
Yep.
But you can't sit over here and say, yeah, we're compliant. Except if you look at me, I'm really not. But don't worry, because you can't look at me because I'm not regulated.
Yeah, unless the CFPB changes that and enacts that dormant authority role.
So really, that's why I get away from the vocabulary of direct and indirect. You're a BaaS bank or you're not a BaaS bank, and you're going to be held responsible for the regulatory liabilities of any brand that you bring on, period. Now, if you just embrace that concept that maybe you bring this person from around the bank and you sit down to open the account and she didn't have any idea what the regulations are, what questions she's asking, whether they're automated, whether they're not, and whether they are compliant or whether they're not. What kind of risk would that be? No one would open an account under that scenario. And that's what we're doing in fintech. We need to stop that, get it right, and then bring it forward in a better way. And that we can do. It's the rush to run over that process and act like we're not doing it when we all know we are. Then let's just get it right. That's all. It's not that.
And I would love your feedback on when you say a BaaS bank, which model are you thinking about when you're saying
I love her. Okay. That is really a wonderful question, because some of the models of how you create a BaaS bank, it is built in, you don't have to worry about it, right? Like a sidecar. And if you said, I'm going to do an FBO type of operation, well, then we basically got a subledgering to talk about, and who owns the relationship there, and is it on core, is it not on core? And that'll only matter, and it'll only come up in the form of a bankruptcy. And then also, let's say the third party model of how to go about it. There is a platform that maybe or maybe not sub platforms that out to somebody else, which reduces the visibility of the regulator.
Visibility is a tough conversation right now.
Yeah,
I agree.
So we built the system ourselves.
I agree. And that model also, in addition to reducing the visibility, what it does is it has a fundamental business incentives conflict. So I have this conflict to grow volume to X amount, mainly because I took way too much VC money. And before I can go for another round, I got to show X amount of revenue coming in. So I got to book that ACV volume, right? And by the way, I got this bank charter that I got to appease. Well, which one am I going to appease? I'm going to appease the VC guys because they're giving me the money, right?
Yelling at me today. Right. Yeah.
Right.
And that is why we need leadership.
Again, I think it just goes back to, we've allowed some of these guys to create original content within the supply chain in a heavily regulated industry before we needed to. And so that's honestly the reason why I joined Infinite was I needed to be a part of an organization that was helping fix this problem, giving banks the agility to move and flex, to offer an embeddable financial product where they don't own last mile delivery of that financial product maybe, but they own end-to-end protection of that product. So that means that, this deposit account is embedded within another platform for construction workers, right? Now I might own that product through a prefab and the APIs connect directly to my bank core on the back end. But all of the other players within that platform are separate entities, not part of the banking institution.
And bless your heart for actually looking at trying to solve the problem rather than ignore it. And I think really that's one of the debates in our industry right now is whether
it should be ignored.
Exactly.
It's an insane debate.
Dave, you shouldn't say this out loud. It's like, what?
Yeah.
Okay, we got to fix it. Now here's my thing here, and this is such a cool thing. We can build technology now faster than we can write regulation. Yeah. So since we were trading bones and stuff at a bank, cavemen, right? Doing banking, I got an arrowhead and you give me a spear, right? Sure. Okay, cool. That's banking 101 from the history of how we got here, right? Now we all of a sudden reach this moment to where we have to write new regulations and we have to follow new laws and we have to try to curb this process as our political process actually slows down. Yeah. And our capabilities in that front of comprehending. Talk to an in-depth conversation with a senator about crypto and it doesn't take very long to go. They're not a crypto expert. Mm-hmm. Okay. So whatever it is we're talking about, I can tell you right now, our technology capabilities are exponentially growing faster and faster and faster, where our ability to change regulation is actually slowing down. That creates a self-governance necessity that we have to do as an industry.
Right. Yeah, that's right. 100% agree. That is spot on. And how do we create the right terminology and the right positioning in order to make our industry move fast for digital disruption? Because it's happening whether we want it or not, right? It is happening. So how do we voice our concerns with innovative answers to the regulators?
If you look at this, guys, if you watch a lot of these that have unfolded, there's typically one company that comes out and does something a little different, right? Which spawns 3 or 5 or 7. And now we've got sort of a new niche area, right? Right. Oftentimes, look, if you know the companies, you know all the people. Everybody knows this isn't exactly perfect. They know better, right? But everybody is sort of pervasive in allowing that to go forward. If one of those players had given up a deal or two to do it the right way, when the others came crashing down, they would have been the clear victor, right? And I've seen like 5 or 6 of these little microcosm pockets of market now that nobody wants to stand up and be sort of the self-governed good guys. And if they had been, they would have killed their competition in the long run.
I had a guy the other day, we were talking about this topic, and he said, really what you're saying is responsible drinking.
It's like, be an adult, man.
That's an oxymoron, right?
We're going to face prohibition. So rather than face prohibition, maybe we should do more responsible drinking.
Yes.
Right. Yeah, that's a good thing. But I guess that's where you have to look at the makeup of the leadership team of those organizations. Do those people come from banking or do they come from technology?
Oh, and they've been here they think fintech was invented 4 years ago. And I'm like, I've been called the kid my whole life, and at least I've been here for a decade and a half.
You called the kid this morning on the call.
Yeah. Even me, right? It's like we go. I predated fintech by a decade. You know what I mean? Like, this is hilarious that somebody just showed up and thinks this was just invented.
Guys, this is such a cool moment, though. Sarah, one of the brightest minds I've ever seen. Tanner, bright minds, and this idea of putting fences around our own capabilities.
You're one of the oldest minds I've ever seen.
Yeah, thank you.
Still bright.
See how it feels, butthead. Yeah. Hey, put together, we average out well.
But it's a moment of responsibility for the industry, and that's going to be coming down to: are you up to that? Are you up to that? And now, what we're really doing right now, if we all just stood back and say, "Well, really, what's going on?" We're scaring the hell out of everyone. We're scaring regulators. We're scaring other bankers from the greatest opportunity that's ever been. we're screwing this up. We've
Mm.
got to do better. And I think we can. And again, we need leadership here. And that's what, Bill Briggs, Bass Association, great. Okay, let's put people in these positions that can listen and learn. Listen to people like you and listen to others that have bright minds and big ideas. Otherwise, our technology is going to continue to outrun what we're going to do. And if you think we're going to take the brightest minds in technology and they're born the most ethical people at the same time, you're absolutely nuts. So we're going to have to put fences around what we do, responsible drinking. And this idea of using people like you, use your brain to figure out how do these things work, and how do you move the money from here to there, and how is it working this way, so that you can shed light and illuminate. There's a possible Reg E violation right there. There's a BSA problem that could happen. Illuminating these problems, and through companies like yours that can stand up and say, here's a better way to do it, and here's a way that we can all win doing it. That's big. That's really big.
Oh, it's big for the industry. There's so much change happening even within our industry, apart from this nuance, right? You've got new forms of money, new payment rails, you've got globalization happening, supply chain issues at the global level that have to be considered. Man, I know it's crazy, but I pray for our regulators because they have a lot to deal with. That's a lot. They're not just thinking about our domestic economy. They have to think about our global economy, and the decisions I make in our domestic economy impact our.
Is a world currency. Yeah. If we don't maintain ourselves a world currency, boy, what a mistake.
Obviously the credit rating, right? Which brings you the debt, how did we get that far from fintech that quick?
I know that was fast.
Yeah, that's the scope though, man.
I think as a leader in this season, you have to think on the macro level. You cannot just think about the micro and how am I going to solve for this widget or this one company, go to market strategy. It has to be fit within the broader ecosystem.
I think you said something that was profound there about this season. Did the two of y'all feel like we just absolutely rolled into a whole new season, like in the last couple weeks?
Yeah.
Like everybody else finally woke up to the fintech season, right? All the bankers, everybody's here now, and it's like, damn it, we were on the same page for like 2 days, right? And the chapter turned, man, right? Like I feel like the world just started spinning faster away from what everybody now I think is finally caught up to where we were a few years ago. Yeah. But I think we're running away from that even.
What do you mean? Like, you give me an
example. I mean, look,
example.
everything we were talking about, the BaaS space, the connectors, I think direct digital brands, okay, look, what you're ultimately outlining there is a lot of different ways to distribute or embed fintech, right? Whether that's I'm a bank and I built my own stuff, I use a third party, a vendor, to embed products. Whether I use maybe a vendor to have my own products that are a separate brand from my traditional brand, a direct bank, right? Or whether I'm pushing, maybe I own or have bought somebody else's software to push somebody else's brand, BaaS, let's say it's Home Depot. Okay. Yeah. Those are all the same thing and they're all entirely different all at the same time.
Gotcha.
Right? So, I mean, from the regulatory perspective, those very much are the same thing. I mean,
let me say what he said a lot more simple.
Please.
Bankers, every business out there is going to have banking capabilities, whether that's Walmart issuing a card or whether that it started with reward programs. Now it's gone to they can actually have debit cards, and then you got big payroll people actually doing payroll cards. So Walmart, 1.7 million people or whatever, sure they could do their own little payroll card or earned wage, different things like that. All right, the cat is out of the bag. Yeah, it's not going back in. Get in the game or get left behind. Right. I think, did I say what you were trying to say?
You did. And if you think about, we all talk about this as these sort of specific centricities, but they're all kind of fintech. Yes. And from a regulatory perspective, they're all pretty damn similar. From a business delivery perspective, they're like violently different, which makes it a difficult conversation.
And all of this is scary and it's complicated and it doesn't have to be.
I agree.
Says easy, does hard though, right? That's true. Yeah, no, I agree. But it does require the banks to have both a traditional market strategy where I'm building this product for a customer that knows my brand, whether that's my digital banking brand or, my own brick and mortar brand. And I'm also building products for customers that will have an embedded experience within a broader platform.
I think what you said there, that was pretty interesting. Like requiring that a bank has a traditional and an untraditional market plan. That it could just say NA and I'd be cool. At least put it on the damn strategic plan.
Right.
Right. What's my untraditional plan?
Right.
I like
right.
that.
Yeah. I try to talk to banks
really
about.
Good. Honestly,
Yeah.
that's it.
That's
it in a nutshell. Run your bank, serve your customers. That's fine, but you can also do this other stuff.
That's good.
Right. Yeah. I talk to banks about having a traditional market strategy and an ecosystem strategy. And you have to have an ecosystem strategy to play in the embedded finance space. You have to.
Good call. Good call. Do you think I'm going to leave you with one kind of hard question? Obviously, the three of us are pretty head over heels on this, which is how we end up here, right? We've talked about it together for a long time. We all, I think, feel really strongly that the BaaS side of the world and these alternative fintech models are probably not optional. Would you agree with that? And I think I'm not the guy saying if you're a bank and you're not participating, this is going to kill you. It probably will a lot, right? I think it's maybe one of the death by 1,000 cuts line items,
Yeah.
And I think there's probably some time value, you know what I mean? And I think we'll see this shift. They'll be using different words.
You're dang sure going to miss a great opportunity.
Yeah, but I'm beginning to shift. That's what I want to hear from Sarah. I'm shifting from BaaS as an opportunity to a prerequisite requirement. What do you think?
I 100% agree. And I know that there's been some talk in the industry of putting a limit
I know
on.
It's scary to say out loud, right?
I know it is scary, but I think if we're going to talk about being leaders have courage, and we got to say the hard things. But I know there's been some talk in the industry about folks that say there's only a certain amount of banks that can play in BaaS, and I would say that's true if you stick with the same model that you've had, where the bank is just subdelegated to be a bank.
Thank you so much for saying that. Yes, that is a dumb conversation to have, spoken by the people that this is the group that does it this way.
Right.
Yes.
Right.
That's a true statement. Now do it multiple other ways, no longer a true statement.
Right. Yeah. But to Tanner's point, I do feel like strongly that digital supply chain disruption has hit the banking industry. We were able to stave it off for a long time because it was so heavily regulated. But exactly what happened in the entertainment industry with Netflix, all of a sudden creating an aggregator model and a platform model to distribute content, both their own and those and other people's, right? That is just a platform play. And that is where embedded finance allows banks to participate in the platform economy. So yes, 100% agree.
I mean, you're going to find the occasional, some little bitty mountain town doing some ag loans, right? Maybe that guy's okay. But I mean, anything where you're exposed, I mean, if the internet is in your town, you're probably in trouble.
Right.
I mean, we're going to have to participate with it. You know what I mean?
Perfect.
Yeah.
That was very well said.
I've been dying to have this conversation and have you on here because, and I'm sure half what we said probably was a little cross-eyed to a lot of people out there, but you're one of the smartest people I know and all this stuff, and you see all sides of it, and everybody feels like they're an expert and they all want to talk with a really loud voice, and we try to not really scream with a loud voice, but every now and then it's like, watch out for that tree.
Yeah.
It's a good way to, I love it.
There's things out there where we need the smart folks to step up and speak, and I really like the way that you outlined to the bankers that are listening in on this that, hey, there's multiple models. There's multiple ways to do this. It's not hard. It's not super expensive. The people that are telling you that are probably trying to sell you something, right? Just going out there and win.
Yes.
And
That's so
people
good.
that say, look, we're willing to help you in any way you want to do it. And we do think that embedding these products into your organizational structure is an important way to look at the future. And there she is.
Sorry.
Okay.
You got me so good with the people that told you it was expensive or trying to sell me something. I'm sorry. You tickled me badly on that one. Gosh, I'm gonna remember that in my life today. Thank you. Thank you.
But these are concepts that I'm trying to unpack and actually wrestle with, right? And what's really happening to our industry, and how can we be a voice for truth and change amid a lot of disruption and a lot of noise, to your point.
The last thing I really want to know about you guys, like, so when we have, people that come in and say, I'm going to be a BaaS bank and I want to join this process, and I've been told it's going to be all these nasty things on compliance, I'm like, well, just think about the person doing the opening the account thing.
When you do it today,
what regulations do you hit, right? And so when you bring on FinTech partner, you don't have to have a compliance program that covers everything. We call it the pizza. You don't need every single slide. I only need 2 pieces of that pizza because I'm only focused on the things that particular brand. Maybe it's BSA, AML, Reg CC, or whatever, right? Okay. Do you guys kind of advise and help them in that process of when they bring in a brand, what regulatory things they really need to focus on as strengths?
Good question. I will be very candid in saying that we have some really smart people in our organization and they let me tag along. They are all developers from our CEO all the way down. I mean, he was writing code this weekend, and I love working for somebody who builds products. We are not compliant. Now, we have always grown up in the banking industry and have always worked for banks. So we know compliance because we've had to build products that are compliant. We do have a partner, though, that is we bring along with us to talk about compliance, and this is how you should do it, and this is how you should not do it. I mean, I know a little bit, but again, we talked earlier about being breadth of thought instead of depth of thought. I don't go as deep as I should in compliance.
I actually love that. Can I be the one to say it? I love
Thank you for saying no.
Yeah, no, like somebody who doesn't claim in their software to bake in the compliance is a good thing, not a bad thing.
Yeah.
Because what if we did bake that in and it wasn't perfect?
Then
Well,
you would have what we've had here last week, right? And every other week. Yeah, it's a problem.
Fundamentally, as an organization, Infinant believes that we shouldn't be the black box. Now, we want to enable banks to build the products you want to build. So we are bring your own partner if you want to. Now, we do have some partners, but I definitely against the black box model. And the black box model requires you to pre-build those KYC and the compliance built in.
I'm not a fan. If you can't tell, I hate that concept of let's build all of the reg, the compliance, everything. Everybody forgot this stuff is not only very complex and there's little minutia details that'll kill you, but it changes a lot.
Right.
Based on bank tolerance.
And software doesn't change very well, as we all know.
If you're working with me, a business owner, I'm your FinTech brand, and I decide to do something in my business that totally changes the whole reg scene on your side.
Yeah.
So, you know, the mirroring and the change monetization and all of those things that go on in this. But most importantly, bankers need to realize that a FinTech does what it does. What if it's lending or if it's card or whatever? Okay, there's only so many things that you need to be concerned about. You don't have to know everything, and just focus on that. But this is where you get into trouble when you bring on 100 FinTechs. It's like, now, oh boy, you know. So stay focused, and you can go faster. Or if you want to do one thing, then focus on that thing.
1 or 2 a year.
But if you decide I'm going to be diverse, you better go damn slow because you're going to run into a lot of issues.
That was a good call.
Well, yeah, real quick, just what
final thoughts. Shoot.
Final thought, Tanner, what you were saying, it goes back to the fact that we've disrupted the supply chain and allowed the suppliers to become manufacturers of the product.
Good call. I love it. That was such a good opening salvo.
I love it.
Yeah. Hey, this was awesome. Thanks so much for joining us. I
loved it.
If everybody can't tell, we all talk a lot and have a ball talking about this stuff.
It's hard to find
it today
like us to geek out with.
Hey, it's great.
Yeah. Trying to figure out the future and how to guide people to get there in the safest, most compliant way to do it that makes them the most money.
Very good. Thanks.
Thank you.
I had a ball. I'll see you next time.
Appreciate you. Take care.
See ya.